Your doctor says you need surgery. The surgery costs $80,000. And your insurance company just sent you a letter with one word that changes everything. Denied. That word can feel like the floor dropping out from under you. You did everything right. You paid your premiums every single month. You picked a plan. You thought you were covered. And now the company you trusted is telling you they will not pay. What do you do? Where do you even start? This is the story of what really happens when that letter arrives, and more importantly, what you can do about it. Meet Sarah. Sarah is a 42-year-old teacher from Ohio. She has 2 kids, a mortgage, and health insurance through her job. For years, she never really thought much about her plan. She paid her share each month and figured she was protected. Then one afternoon, her doctor told her she had a serious spinal condition. Without surgery, she could lose feeling in her legs. The surgery her doctor recommended cost $80,000. Sarah assumed insurance would cover it. Her doctor said it was necessary. It was not optional. It was not cosmetic. It was the kind of surgery that keeps you walking. So when the denial letter arrived 3 weeks later, she sat at her kitchen table and read it 4 times because she could not believe what she was seeing. The letter said the surgery was not medically necessary. That phrase, "not medically necessary," is one of the most common reasons insurers use to deny a claim. It sounds official. It sounds final. But here is the thing. It is not final. Not even close. Before Sarah could do anything, she needed to understand what that phrase actually meant. Medical necessity decisions are made using formal clinical criteria that insurers are required to follow. The reviewer is typically a licensed clinician, often a registered nurse, working from those established guidelines. They have not examined Sarah personally. But that does not automatically make the decision arbitrary or purely profit-driven. Sometimes it means the documentation submitted did not fully support the case. Sometimes information was missing. And sometimes, as in Sarah's case, the request was simply filed incorrectly. Her doctor's office had submitted a prior authorization request, which is the formal permission insurers require before certain procedures, but it had been sent to the wrong department and got lost. The denial was technically valid based on what the insurer actually received. That was not Sarah's fault, but it was now her problem to solve. And understanding the real reason for the denial was the first step toward fixing it. This is where many people make a very costly mistake. Sarah's first instinct was to give up. Maybe she could find a cheaper surgery somewhere. Maybe she could take out a loan. Maybe she could wait and hope things improved on their own. A lot of people stop right there. They read the denial letter, feel overwhelmed, and walk away from a process they could have won. Here is what most people do not know. You have the legal right to appeal a denied insurance claim. Every plan that follows the Affordable Care Act is required to have a formal appeals process. That means you can ask the insurance company to review their decision again. The data consistently shows that appeals, especially for prior authorization errors and missing documentation, are frequently successful. Many denials are reversed simply because the right paperwork was submitted the second time around. That said, your odds depend heavily on why the claim was denied in the first place. A denial based on a missing document is far more likely to be overturned than one based on a service your plan simply does not cover. Knowing the difference matters. Sarah found all of this out from a nurse at her doctor's office. The nurse had seen situations like this before. She told Sarah to pull out the denial letter and look for the reason code. Every denial letter contains a reason code, which is a number or short phrase that explains exactly why the claim was denied. Understanding that code is the essential first step to building a strong appeal. But the nurse also told Sarah about a faster option that most patients never hear about. It is called a peer-to-peer review. That is where your treating physician calls the insurance company's medical director directly to discuss the case. It does not require a stack of paperwork. It does not require waiting weeks for a formal response. In many cases, a single conversation between 2 physicians who speak the same clinical language resolves the problem before a formal appeal is even necessary. Sarah's doctor made that call. The medical director agreed to take another look, but asked for more complete documentation before making a final decision. That one phone call moved the case forward faster than any letter would have. At the same time, Sarah knew she had a deadline and could not afford to wait around. Most plans that follow the Affordable Care Act give you between 30 and 180 days to file a formal appeal after a denial. The specific window depends on your plan type. Plans purchased on the marketplace, employer-sponsored plans, Medicare, and Medicaid each have their own timelines and rules. You should always check your own plan documents for your actual deadline. Do not assume a general range applies to your situation. Sarah moved quickly. Her doctor wrote a detailed letter explaining in clear clinical terms why the surgery was medically necessary. It included her test results, her diagnosis, her symptoms, and a direct statement that her condition would worsen significantly without the procedure. That document is called a letter of medical necessity, and it is one of the most important pieces of evidence in any appeal. Sarah also called her insurance company's member services line and asked for a complete copy of her plan documents. Inside those documents is something called the summary plan description, which lists exactly what is covered and what is not. Sarah found that her plan did cover spinal surgeries when a physician deemed them necessary. The coverage itself was not excluded. The problem had been the prior authorization process, not the benefit itself. She submitted her formal appeal in writing. She included her doctor's letter, her test results, the prior authorization confirmation number showing the original request had been submitted, and a clear personal statement explaining her situation in plain language. She sent everything by certified mail, so she had a delivery record. She kept copies of every single document she sent and received. She also did something that most people never think to do. While her appeal was in progress, she contacted her provider's billing department and put the account into dispute status in writing. This step matters more than most people realize. If a bill goes unpaid while you are waiting on an appeal, some providers will send it to collections even if the appeal ultimately succeeds. Disputing the bill in writing and documenting that a formal appeal is underway can protect you from that outcome. Policies vary by provider, so do not assume the billing process pauses automatically just because you filed paperwork. Now, here is what happens if the insurance company still says no. If your internal appeal is denied, which is sometimes called a first-level denial, you have the right to request an external review. An external review means an independent physician, someone with no financial connection to your insurance company, examines your case and issues a binding decision. The insurer is required to follow it. External review is free for most patients, but whether you can access it depends on your plan type. If your insurance comes through your employer and your employer self-insures, meaning the company itself pays the claims rather than an outside insurance carrier, then your plan is governed by a federal law called ERISA rather than by state insurance regulations. ERISA plans have different rules, and many state-level consumer protections do not apply to them. Roughly 60% of people with employer-sponsored insurance are in self-insured plans without knowing it. If you are unsure which type of plan you have, ask your Human Resources Department directly. It is a simple question that could significantly affect your options. For those who do have access to external review, it is one of the most powerful tools available. Always request it if your internal appeal is denied. Sarah won her internal appeal before it ever reached that stage. 3 weeks after submitting her paperwork, she received a new letter. The surgery was approved. The full $80,000 would be covered, minus her normal deductible and out-of-pocket costs. She cried when she read it. Not from sadness this time. Now think about what would have happened if she had stopped after that first denial letter. She would have either gone without a surgery she genuinely needed, or found a way to cover $80,000 out of her own pocket. That is a car. That is close to a year of someone's salary. That is a number that could follow a family for 10 years. The system is complicated, and for some people the road is harder. If you are dealing with a self-insured ERISA plan, or if the denial is based on a clear coverage exclusion rather than a documentation problem, the outcome is less certain and the process is more difficult. In those situations, professional patient advocates and healthcare attorneys exist specifically to help. Many work on contingency or charge modest fees relative to what is at stake. If the numbers are large and the process feels unmanageable, getting professional help is a reasonable and often worthwhile choice. But for a significant number of denials, particularly those involving prior authorization errors, missing paperwork, or documentation gaps, the process is something you can handle on your own if you know the steps. When you get a denial, read the reason carefully and find the reason code. Call your doctor's office immediately and ask whether a peer-to-peer review is possible, before you file anything formal. If not, ask your doctor to write a letter of medical necessity. Get a copy of your full plan documents and find the summary plan description. Know your appeal deadline and do not miss it. Submit everything in writing and keep copies of all of it. Contact your provider's billing department and put the account in dispute status while you wait. And if your internal appeal fails, ask about external review, keeping in mind that your options depend on whether your plan is governed by state insurance law or federal ERISA rules. After her surgery was approved and her recovery was moving along well, Sarah shared her story with two co-workers who had both given up on denied claims years earlier. One had paid $12,000 out of pocket for a procedure that might well have been covered if she had appealed. The other had simply gone without treatment. Neither of them had known they could push back. You knowing this right now already puts you ahead of most people. Insurance denials are not always the end of the road. For many people, they are the beginning of a process that some insurers are counting on you to find too confusing to start. But now you understand how it works. The one thing you can do today is pull out your insurance card and find the member services number on the back. Save it in your phone. If you ever get a denial, that is your first call. Ask them to explain the denial in plain language. Ask whether a peer-to-peer review is available. Ask how to begin a formal internal appeal. That one phone call, made at the right moment, could save you more money than you have ever paid in premiums. And the next time someone tells you their insurance denied a claim, you will know exactly what to tell them.